I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
You're saying we should be concerned if we see very high stock prices this time of year.
Yeah, well, we've got elevated stock prices, as we've been saying, that some of the central bankers, in frustration that the usual recipe of easing credit and prompting economic activity hasn't been working that well. So then they become even more ambitious and then began buying bonds some time ago, hoping that that would fire up business, and it isn't really working. And then now they've decided that they should be, well, for some time now, they've been buying equities out of the market. And theory is that these high equity prices and high bond prices would be kind of a prosperity thing, and people would consume more and get the economy going. But the problem is that their theories from day one have been inappropriate. They got this notion that there is such a thing as a national economy. Try and tell us about that in Canada, that our economy is separate from that of the U.S., or even that the Ontario economy is the same as the Prairie's economy, is the same as the BC economy. It's all nonsense. And then the other idea, of course, is that, this is, hundreds of years ago, various intellectuals looked at the business cycle and they saw that credit expanded with business activity. Yeah, that happens. But then they went cause and effect on it and said that, if we artificially expand credit, that will push business. But, hey, that's correlation and causation. It's the old one, and I've used it for decades, is that when the roosters crow in the morning, they cause the sun to come up. And this is the truth of what's behind central bank interventions. It's both are seriously flawed. One, the idea of a national economy. The other is that expanding credit pushes business, and it isn't the case. So anyways, you've ended up with highly elevated stock prices and bond prices in the never land. I mean, this is phenomenal. So then we also know that there's a long history of if a market's going to break, it can break in September and October. So, but often going into Labor Day, the markets can be positive. But let's just sort of sum it up this way: is that on this positive thrust here now into Labor Day, one should be lightening up on equities, and also making a little note to yourself that after Labor Day, you don't wear white shoes or white belts and that summary stuff. It's very déclassed to wear white shoes after Labor Day.
Well, where were you wearing your white shoes to anyway?
Other than tennis shoes, I don't have any what one would call dress-up white shoes, thank goodness.
And I guess you're not a lawn bowler either, because they wear white.
No, I'm saving that up for when I get really old. But at any rate, so there's some vulnerability out there. Then the other one is that a while ago, the European central bank, in frustration, then started buying European corporate bonds. And, of course, that's been very positive for other corporate bonds around the rest of the world. So where we had the disaster and panic in lower grade bonds and widening credit spreads and falling crude oil prices down into January, and then that was a panic. You recall that we were looking for a low in crude oil at that time. So then you'd have a natural narrowing of credit spreads and the rebound in crude, all of which we were getting. And so what has happened now is that the narrowing credit spreads, which is the difference between high-grade bonds and low-grade bonds, has continued. It's becoming very dynamic because you have a motivated buyer out there. Now, this has been helped by the crude oil price being firm, too. But anyways, crude in the last week has begun to falter a little. No big deal yet, but it has dropped down a couple of dollars. So this is then adding to the probability of problems come the fall. As I say, very elevated prices for low-grade bonds and very elevated prices for equities. Then the other part that keeps central bankers looking like they're doing something is when other asset classes are firm. And other asset classes, of course, include high-end real estate. And in Vancouver, of course, it includes all real estate. But this game has played itself out. The Hong Kong residential market is always very lively, and it peaked out in August a year ago, dropped down, I think it was something about 10, 12%, and then it's been basically sideways for the last 3 or 4 months. I looked last week for an index of residential prices in China, still going up strong. At least that was like a June report. But then we're seeing stories out of London, England, where all of a sudden, high-end stuff is becoming weak. And then this week also there was another story about in the U.S. with the high-end areas like the East Hamptons and Miami and Los Angeles and Aspen, Colorado. And all of a sudden, bang, it's no bid, no trade. And the sales volume of real estate transactions has dropped hugely. It was headline stuff. But not too much comment on the price decline. I think that'll take a bit of a while to resolve. So this then has been, with real estate prices going up hugely, that helps out the central bankers in their madness to inflate everything. But it's the public that chooses what to speculate in, and it's the public that also chooses how long they're going to speculate in it. And then when it becomes exhausted, then it goes down. So what do we see out here? We've seen crude establish a very robust high, and going into perhaps a season when it can be somewhat weak. We've seen base metals stocks set a very robust high a month or so ago, and they have become weak. The utility sector was a huge strong rally, and it's taken a huge correction. As a matter of fact, the utility stocks have corrected so much they'll probably bounce out of here now. But it looks like speculative bursts have been accomplished in real estate, and it's fading. Certainly in groups such as I said, base metal stocks, gold stocks, silver stocks, energy stocks, all of this is, and utilities have done very well and are coming down a bit. In the last couple of weeks, bank stocks have had a nice rally, but they are not up to the highs of last year. Now, the other one, you'll recall that we used last year, which was the old and ancient Dow theory, whereby for a bull market, you have to have the transport stocks confirming the new highs for the Dow or the S&P. And that was not happening last year. Right through until May, it was glaring that the transports were not there. And eventually it broke, and that's what we used in May to say that the bull market was over. And then what you have here now is the S&P and the Dow, of course, have gone to new highs. Oh, largely with central bank buying, because if you take a look at the broad market, the whole New York Stock Exchange Composite, which symbol is NYA, it's rebounded, but not to new highs. The financial sectors have rebounded, but not to new highs. And, of course, the transports have rebounded, but not to new highs. So there's still, let's call them technical cautions out there. And plus you have that if you have an overinflated market, which we have, and within it there's likely some speculators or large funds or whatever that are offside, that they need the immediate price gain every day to stay on side. And if you don't get that, then the problems start to come in. So yes, we have elevated prices, and we have going into the season when bad trading is discovered where people are offside. Now, I don't really wish for this, but one should be alert to the probability that we can find discoveries of insolvencies. For example, the formerly big German bank Deutsche Bank has been extremely active in derivative business, and its stock has been a disaster. And the stock is saying that, hey, there's something not so good there. Then you had the huge South Korean shipping company here. All the bankers pulled the pin on them and seized ships wherever they are, import, whatever, and they just shut down a huge company. And you've got major container ships just sitting. People who are using the container ships to transport goods don't know whether they're going to be able to get them because all the ships have been seized. So, I don't recall anything like this for ages. Not in a big, huge shipping company going bust like this. So it's going to be a fascinating fall.
We'll have more with Bob Hoye right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Bob Hoye. Bob, Russian President Putin has said he's in favor of capping oil production. And, of course, OPEC has said the same thing, but nothing really happened after these statements. And yet the price of oil today, at least, bumped up. Is that all they have to do, is just mention that they might cap something and that's good enough? Oh, yeah.
That's the game. They're playing that in the bond markets and stuff like that. Yeah, the authorities like to talk up a price, whereas a trader will sit and accumulate a position quietly because you're going to get the best price. And then if you're a big trader like Warren Buffett, various times he'd taken a position in silver and on a quiet basis. And then maybe 4 months later come out and the numbers come out and shows that he has a large silver position. So people would buy silver and perhaps providing a bid that he could get out. So, but with the policymakers and central bankers involved in the markets, no, they have ulterior motives. They don't want to make money. All they want to do is see prices up. So they're talking, Putin talking about raising or doing things to restrict production with the hopes that prices go up. But this is, in a post-bubble world, the financial bubble that blew out in 2007 and crashed in 2008 had similarities to previous great bubbles. such as 1929, or the previous one to that was 1873, when you're followed by a long contraction. And one of the features of a post-bubble contraction is the senior currency becomes chronically strong against most other currencies and most commodities for most of the time, which is the case. You also have weakening commodity prices, and that puts on pricing pressures. And there was an article in the Wall Street Journal the other day with a chart showing that even normal retail trade has pricing pressure problems. So this is then, of course, in the 1930s, I think the phrase started with the agricultural in North America, where with low prices, that would prompt the farmers to plant from fence post to fence post, because they knew that in order to keep their same income, hopefully, they'd have to plant more. And this, of course, is what's going on in the crude oil business. They're planting from fence post to fence post, only in this case, they've been drilling fence post to fence post, and it's with the fracking phenomena where you have a revolution going on in the industry. But these type of revolutions in industry are nothing new. I mean, copper went through it in the early 1900s, where they learned how to mine low-grade copper and huge amounts of it. So then what fracking has done is brought the cost down hugely, and you're having a whole new price regime. And various governments would like to see higher prices. But they can, so in answer to your question, when somebody in a position of authority says that they're going to suggest to cut production, that will pop the price, particularly if it was oversold, like crude oil had dropped quite a bit here recently. So then it pops the price. But it's not going to change the situation, because with the North American fracking of crude oil, any slight price increase, and these guys do better and can turn the taps on. That's on and off. So it's a whole new regime for crude oil. And the idea that interested parties can do something to raise the price is just not going to work. So, as a matter of fact, back in 2015 when crude started coming down, that was from a high of, 107 in June 2015. On the initial decline, a lot of the Wall Street pundits were saying, this is great, it'll lower gasoline prices and everybody will have more money to spend on things. But they don't realize that when crude oil prices go down, it's a cyclical event, a cyclical slowing for most commodities and everything else. So prosperity kind of disappears. So, no, I don't think talking up crude prices will last for very long.
Right. And of course, when you talk about economic impact, I visited Alberta recently, and Edmonton International Airport was deserted.
Uh-oh.
No activity in the shops. The only shop I saw activity in was the one selling earbuds for your iPhone, so you had something to listen to on the plane. But apart from that, the bars were empty. And I was there 2 years ago for a family reunion, and the place was packed. And although Alberta is a small segment of Canada's population, about 20% of the economy is driven by the Alberta oil industry. So don't kid yourselves. It hurts every Canadian when Alberta has a downturn.
Oh, yeah, it does, and sadly. And the main thing is that there will be agencies or people or governments who will try and talk it up. It may be effective for a day or so, but not for long. The direction in most commodities are going to be weak, and that then filters down to the pricing power of most businesses. It goes up and down with commodity prices. So it's great for the consumer. Once price, also the Wall Street Journal had an article so much that where last year everybody was upset about the cost of vegetables soaring, they've come down quite a bit in the States. Western Canada is something else again. So, but anyways, yeah, the problem will continue to be weak commodity prices and weak pricing pressures, weak pricing abilities for most business and commerce, and the inability to service debt, and then somewhere then you're going to have a problem in lower grade debt. But at the moment, the sun's shining on most everything.
Bob, I have a question here. Hanjin Shipping Line, that's the one that went bankrupt, was the biggest shipping line in the world. Does that mean if you had a container or two of widgets coming here from Hong Kong that they could seize those widgets as part of the debt that has to be paid?
I think that's something that, of course, many people who are using or, expecting the delivery, they're relying on that. But who knows? It depends on, I guess, the creditor, and he decides to seize the ship, which, if the loan is against collateral being the ship, how does it affect the cargo? I don't know, but this is going to be a fascinating problem to watch it work its way through the system. Tragic, it is, but it's the real world, as Schumpeter said some decades ago, is creative destruction. That's what the free markets are all about. If somebody gets over-leveraged in providing a service that's not needed, they get to go broke, unless they have a friend in government.
Well, Donald Trump's made a living out of going bankrupt. Bob, thank you so much for chatting with us, and have a great Labor Day.
Jim, it's good to be with you, and you have a good Labor Day weekend as well.
My guest has been Bob Hoye, Chief Investment Strategist for InstitutionalAdvisors.com. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward questions to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.